Hi guys, welcome back to this Money Control live stream. You're watching Closing Bell with me, Nandita Khemka.
And I'm Yatin Mota.
Well, Yatin, a second straight day of losses on the Lal Street, and as I was saying, it's a no fun Friday given the fact that we have seen a triple-digit cut on the Nifty. In fact, the Sensex has also slumped somewhere around 400 points or thereabouts. And barring the PSU banking pack, all the other indices ended the day in the red. In fact, Pharma, metals, FMCG, all of them in the red. Even the auto basket, which was trying to float around in the green, ended in the red. Mid and small cap indices managed to close with slim losses, but they were holding out in the early part of the session, but they also succumbed to selling pressure and ended the day with losses. If you look at the Nifty gainers, you have the likes of HCL Tech on a $2.1 billion deal win. It has rallied over 3%. You have Reliance Industries that managed to make a comeback in the green, and there is a positive report by Morgan Stanley. On the back of that, the stock was among the top gainers. You had the likes of Power Grid, Titan, Ultratech. There are some of the other gainers. On the flip side, IndusInd Bank, NTPC, Divi's Lab, Tata Consumer, all of them were under pressure. Private banking names remained under pressure, and Apollo Hospitals came out with earnings in the second half of the session. Margins were in line, but profits were below estimates, so that stock was in focus. But a lot of mid-cap PSU banks were buzzing in today's session, Yatin.
Absolutely, and the PSU banking index was the only index which was in the green today. IOB, Central Bank, all of these stocks gaining in double digits. But if you look at the mid cap and the end of the market, obviously there were news flows because of which there was a lot of stock reactions. Kalyan Jewellers, after a strong set of earnings, continued to rally. Today the stock ended by nearly 11% plus. We had GMM Fodler also moving post the good quality earnings, 10% up for that one, and Hindustan Copper. That stock has been rallying, but today also the stock gained by nearly 7%. What was not doing well in the mid cap space was Apollo Tyres, stock down 8% after the quarterly earnings. Alchem also post reporting the quarterly earnings, which are not that bad, but yes, the stock was down 8%. Polyplex, Torrent Power, as well as Birla Corp were the other losers in trade. But Nandita, clearly, as you said, no fun Friday. And out of the 50 stocks in the Nifty, 40 ended in the red. So you can clearly see how really there was selling across the board as far as key stocks on the benchmark indices are concerned.
That's right. They were selling across the board. A handful of gainers on the Nifty, and among those gainers, you had HCL Tech. That is one of the stock on my radar this afternoon, given the fact that it has clocked its best day in 14 months. It has bagged a $2.1 billion network services deal from Verizon. This deal will show good revenues or positive revenue impact for over 6 years starting November. Now, deal wins in the first quarter came in at somewhere around $1.56 billion, which was below or has fallen from $2 billion that the company clocked in the last 7 quarters. Now, under this collaboration with Verizon, the networking power and scale of Verizon will be combined with HCL Tech's managed services capabilities, and this combination will offer large-scale wireline delivery services to enterprise customers. So, and this deal will fall under the telecom and technology vertical, which witnessed major ramp downs in the previous quarter. Management has indicated that the company is building a very strong deal pipeline for the first quarter itself, and it had even though earnings were pretty subdued, it had seen all-time high order book at the current juncture. Company had also, remember, maintained its revenue guidance for FY24, and after that we had seen quite a good rally come in IT stocks, but then Infosys had kind of spoiled the party. And if you look at what brokerages have to say, Morgan Stanley has an overweight rating, target price of 1,200 rupees per share. It believes that deal wins of such magnitude provide greater comfort, and that some underperformance could reverse for HCL Tech going forward. So all in all, obviously we know that IT stocks came under pressure particularly after Infosys's disappointing show, but HCL Tech with this deal win looks like it is poised for good gains going forward.
Clearly, and this was one of the top gainers on the Nifty, but what was also gaining Nandita on the Nifty was Reliance Industries, almost closing at the day's high. No major gains though, but yes, it was probably one stock which provided support to today's weak market. Morgan Stanley today came out of the report on Reliance Industries with a target of 3,000 rupees per share, and they say that the company has invested close to $20 billion in the consumer retail businesses in the last 10 years, and probably this is paying off some kind of growth in the coming years and probably for the next 3 to 4 years. Morgan Stanley believes that there could be a 29 to 30% earnings CAGR for Reliance Industries over the next 3 years, which is quite healthy. Actually, a 30% on a very large base, according to Morgan Stanley, could be quite earnings accretive for Reliance Industries. Also, the company is clearly looking at integration of various business verticals, and also if you look at the annual transactions, there also we have seen some good pickup. So, overall brokerages are bullish, and as I mentioned, Morgan Stanley has a target of 3,000 rupees on the stock, and probably on the back of this report there was some buying which was seen in Reliance Industries. A standard disclaimer that Moneycontrol as well as Network 18 and TV 18 are the entities which are directly controlled and managed by Reliance Industries.
Well, Reliance Industries is clearly in focus there. Of course, it has recently demerged its financial services arm, and we'll be looking forward to the listing pretty soon. But the other stock on my list today is JMM Pfaudler. Yatin, we all know that chemical stocks haven't really been doing well, even though the markets have done pretty well. But this stock, after a good earnings performance in the first quarter, has seen a 10% rally today itself. Quarter on quarter, basis, net profit has risen 48%. Revenues have been strong, over 20%. Margins have been good, 14.5% or thereabouts. Order backlog is also pretty strong, over 2,000 crore rupees. But it's the order intake during the quarter, 770 crore. That's a little bit disappointing. But the company says that it sees a lot of opportunity across pipeline, across platforms and geographies. And the management says that the delay that it had seen in decision making will ease in the coming quarter. In fact, it has also said that there is a lot of visibility to the tune of 8 months when it comes to international business and 6 months of visibility when it comes to India business. Stock is pretty flat if you look at it on a YTD basis. But positive management commentary is, clearly, proving to be very good for the stock, given the fact that we've seen a 10% rally. Also, remember, this stock is a part of Saurav Mukherjee's Little Champs portfolio. So, not done all that well, at least this year. But last year, it did clock a healthy rally, and return ratios were also pretty healthy.
Absolutely, and this is one stock we'll keep on our radar. But also, if you look at SAMIL, which is Samvardhana Motherson, that stock was in focus, opened pretty strong, but fizzled out. But if you look at the earnings reaction, that was positive. In fact, the stock ended 2% higher. Intraday, the stock went as high as 6-7%. And if you look at CLSA, they have maintained a buy on this one. They see a 25% plus kind of upside in the counter. They have a target of 124. They do believe that the revenue growth for Motherson Sumi has been quite strong. In fact, it was almost 28% on a year-on-year basis for Motherson Samvardhana. And if you look at the SMR and SMP business, there we have seen the European volumes recover. Obviously, the street was disappointed slightly with the operating performance, which came in slightly below street expectations. But given the fact that the harness division, wire harness division, as well as the vision system, basically, which is the mirror which we use in the cars, that segment is expected to grow. Also, the company recently with acquisitions has forayed into sunroofs as well as other wiring systems, which probably will drive growth in the coming years and quarters. Probably this is one stock which is probably going to benefit with the rising order book with international auto OEMs. For Jaguar, Land Rover, or if you look at Volkswagen, or if you look at global auto companies, especially in the luxury car segment, there the wait lists have been quite healthy. Which will probably benefit auto ancillaries like Samvardhana Motherson, which is SAMIL. Let's see how the coming quarters shape up for Motherson. But clearly at this point in time, we have seen some good stock movement which is coming from lows for Motherson Sumi.
Yes, and I think on a YTD basis, the stock has done fairly well. Yatin, up 30% or thereabouts. So yeah, good going for Motherson Sumi as of now. But with that, we've come to the end of this edition of Closing Bell. If you have any comments, leave them in the comment section below. And of course, for all your other news and updates, stay tuned to Moneycontrol. But for now, goodbye from me and Yatin. And of course, I wish you guys a very happy weekend. And to those who are enjoying the extended weekend, have a good one. Yatin will be back on Monday. I'll be on leave. But we'll see you soon next week. Stay tuned to Moneycontrol for all your other news and updates. Thanks a lot for watching.